Hey everyone, this is Rohit. I'm the founder of Decentro, second time fintech founder.
It's the year 2014. Rohit Taneja has just returned to India after quitting a job with Sony in Japan. He wants to build something for India, and the idea he decides to pursue is way ahead of its time. Rohit decides to build a product that would do what UPI does today, peer-to-peer payments without needing to load money in a wallet. While the startup did not succeed, this experiment of attempting to build an app that works with existing banks was so painful that Rohit's second startup, Decentro, is focused on solving that challenge. In this episode, your host Akshay Dutt interviews Rohit Taneja to learn about his journey of solving deep tech infrastructure challenges in the banking and financial services space. Stay tuned for the conversation and don't forget to subscribe to Founder Thesis Podcast on any audio streaming app to hear deep dive conversations with disruptive founders.
Really passionate about fintech and solving complex problems in the world, in the banking world especially.
Rohit, you're a second-time founder. Let's start with your first journey of getting into entrepreneurship. Just talk to me about that phase of from ideation to actually quitting your job and getting it off the ground. Where were you when you were ideating on it, and how did the idea come about? Just talk to me about that.
Sure. So I was actually in Japan at that time. I was working in a company called Sony, in Tokyo. It's pretty much the same. So I've always been a product person, really like designing, making products, taking them to market and see.
At Sony, you were doing like physical product or like software?
Physical products, hardware. Yeah.
Wow, very cool.
Yeah. So I'm electronics engineer by training. That's how I ended up in the hardware domain. Came back to India, 2014. Core thesis at that point was I wanted to solve some problems which were fairly visible to me, especially which I could see in my social life. For example, one of the problems is how do you really share money with friends? Senior. And this is back in 2014 when UPI was not at all present. So you can imagine how painful just sharing money with friends can be.
Peer-to-peer payment.
Peer-to-peer payments, exactly. Yeah. So classic problem that pretty much every college student, millennial, every young person faces in terms of how do you simplify your social life by making sure there are no money challenges in terms of sharing? Of course, UPI is very simple, but before UPI, we were one of the early players to actually make it happen in the market. So that's actually what the core problem statement was. Very personal problem statement, which I tried to solve using my code.
And how did you get it off the ground? Was this a regulated space back then? Like today, this payment space is highly regulated. And, there would be a long initial regulatory compliance work you would need to do before you can even think of starting. But what was it like back then?
Yeah, at that time it was actually simpler. One was, there was some regulation of course in place. Like for example, you still need a banking partner in the back end to process the payments. And it has to be a regulated account. For example, if you're doing collections and those kind of things. At the same time, if you want to issue your own UPI IDs, then you need to be a UPI, right? PCI certified app. Obviously, when UPI came in, we were on the early place. Yeah. So a few of these things were there, but otherwise it was very simple in the sense that P2P payments was a fairly new thing for the country to understand. And the only regulated instrument available except to banks was wallets, which were like cyclable instrument. People don't really like putting money into a separate wallet just for the purpose of sending to a friend, unless there's a different purpose that can be fulfilled. So that's essentially how, the regulation was. From our perspective, I think the way we got it off the ground, the first thing that we did was, of course, take a lot of market feedback on a way. Is this something that the market really needs? Is this something that our friends need as well? And what should be the form factor? Should it be a mobile app? Should it be a website? Those kind of things. So I first-time founders, everything was new to us. So I did the initial coding. I pretty much built the initial platform when we were just 3 people in the team. And then we started hiring engineers, post a fundraise. The initial year was fully bootstrapped. There was nobody else in the team, just 2 founders and 1 person. And then once we launched the initial app, then that is when we started really getting traction and raised some angel capital.
Okay. What did you build? Was it basically like a payment gateway? You created a payment gateway in a mobile app. Was that it with some workflows around it? Or what was the product?
Yeah, it's not a payment gateway. Payment gateway is more for merchants. This is more like consumer to consumer, right? So what we actually created was very cool. It was basically a social payments application in the sense that, let us say I send you money using bank-to-bank transfer. So we actually replicated the UPI without us realizing that UPI is something in the future. So we were able to create, say, a mobile number to mobile number transfer, which is what happens now, Google Pay. That's something we replicated back in 2015 using IMPS as the underlying protocol. And ultimately, it was a very simple, social-friendly app where you can just go select your friend, send money to him using any of your net banking options. And then the friend will have the option to receive the money back directly into his account.
How does the technology work? If you select a friend, how does the app know what's his account number?
Yeah. So the friend has to enter. The first time he has to enter the account number.
Okay. So just like the moment you select a friend, he'll get an SMS or he'll get a link and he has to go on the link and enter his account details.
Exactly.
Okay.
Exactly.
Okay. Okay.
That's right.
And then what? Like then you would help him log into his net banking? Like you had that integration with banks to log into the net banking and then do the transaction.
Good. Exactly. So on the sending side, you will use net banking or even like some of these other wallets like Paytm, etc., like for sending money. And then the recipient, the first time, of course, he has to register, he has to enter his banking details. Yeah. But the frequent time, the account is already mapped. So just the phone number suffices.
And did you have to build the pipes from your app to the net banking and all those pipes? Did you have to build them or were you able to piggyback on existing pipes?
Oh, we have to build a lot. So, for example, if you look at the second leg, I think the first leg is connection was fairly easier in this case because we were able to use a payment gateway or a wallet functionality. The second leg was actually much harder because we had to integrate with the bank for making payouts directly into those bank accounts.
What is the second leg here? Second leg is when you do a repeat transaction, like when you already have the data.
No, second leg is because like if you look at the money flow, the way like you can't send money directly from bank A to bank B as a consumer to consumer, or rather you were not able to send this before you. API is the only thing that rather enabled it, simplified it. The only other protocol is IMPS. Like I can go into my net banking, I can enter an account number and then send money to that account. However, it's a very cumbersome process because first I have to enter your account. So from an experience point of view, it's fairly low. Like I have to enter your account number every time, and if there's a mistake, it goes something. That's exactly what we changed by abstracting it to a phone number. However, since ultimately IMPS, bank-to-bank IMPS is not an open APS, like in the sense that a consumer is something that a merchant cannot consume or as an app cannot consume directly, right?
Yeah.
So you have to have an intermediary account, which is what a lot of the regulated players do. So the money essentially got debited from, say, the consumer A. Before hitting consumer B, it went to a central pool account, which was a regulated institution. And then from that pool account, it had to be settled to the consumer. The second leg is where we had to interact directly with the banks for me.
What was the need to directly interact with the banks?
Because
but you just need to work with one bank, right? The bank which holds your account.
Yeah, just one.
Okay. So just that one bank with whom you hold the account, there you need to build automation because you would have like thousands of micro transactions. You cannot be doing it through any other way but a direct API connection.
Yeah, that's correct. Yes.
Oh, okay. Interesting. Okay.
Yeah.
Okay. And what was your go-to-market for this?
Oh, yeah. So I think one key benefit here is we ourselves were the users, right, of that. So the moment it came in, like the moment the first alpha beta version came out, we ourselves, the team started using it. We prompted our friends to use it as well. And there's a good viral effect here because every time, just like WhatsApp, right, I add a new friend, I'm able to notify him on the app saying, okay, hey, I want to settle money with you on this particular app. So every new user tries to bring in a couple of more users. So that's a virality question, right? Classic B2C strategy. Yeah, so I think our initial friend circle, my college mates from IIT, my friends in Delhi, those kind of things, those were the early, the users.
And at a team also, how were you funding it?
Initially, we did not. Initially, it was just two founders.
Okay.
And there was one more engineer who came, but it was all bootstrapped. There was nobody was getting any salary for the first.
Okay. Tell me the journey from there. You then raised your angel round, right? So how did that come about? What kind of numbers were you doing at that time?
Yeah. The angel round was purely on the product, like a pre-seed round, more on the idea that, okay, this is an amazing idea that needs to exist. And definitely a backing on the team that, okay, this is a team that's likely to do. So we raised actually from the initial lead, I would say, came from InvestorPad, which is one of our incubators in the previous talk. So the founders of InvestorPad came in as angels. They then obviously had their own circle. With angels, that's a good thing, right? Once you get a couple of great angels, they automatically try to bring in as well. At that time, I think the app was in a beta and maybe we had around 500 users or something like that. That was the first round that we raised. Yeah.
Okay. And keep going on that journey. Like you raised that money. How did the money change your trajectory? And
Yeah, absolutely. This was a very small check back then. I think it was 100K. Yeah, close to 100K in USD. Not like the seed rounds nowadays. That's very small number, which is good enough for a lean team. I only spent for salary or the cloud, spend on AWS. The moment the captain came, we started hiring people. So we hired a couple of interns. We hired a couple of full-time engineers as well. We got in a designer, got in a couple of developers. I think we expanded it over to around 10 in total in the next 1.5 years. Immediately after this app launch, we also entered a competition. This was QPrice. I don't think it happens nowadays, but this was a competition that used to happen for around 3 or 4 years at a stretch. It's basically sponsored by a couple of venture capital who also write seed checks.
Okay.
And they give you a convertible note as a grant, right? So essentially it's just grant money. There's no equity attached to it. And that helps a lot. So we actually won. We were the first prize winners in that. There were fairly large number of applications, I think 500 plus or something across India. So we were the first one from the top 3 players. And that gave us an additional 250K around I think it's August 2015. Yeah.
Okay.
That was the beginning. So I think with that, we have more than enough cash for like a couple of years. We just started expanding on the team side and of course the product side. Eventually,
what were you spending on? Were you spending on customer acquisition or on building product?
We were both. Yeah, everything pretty much. So right from developing the platform, strengthening the statistics and strengthening the product itself, launching new versions very quickly on the application side. So the form factor ultimately was a mobile app. Android first, iOS second, so a bunch of those, developments came in as well. And customer acquisition, we were running Google Ads as well to increase the pace of customer acquisition. Running a couple of contests as well,
Did the money sounds pretty small to start a payments company? Because like at that time, 2015 that you're saying, I think there was this explosion of payment companies, some of which still survive today, some got acquired and don't survive anymore. But they were all spending on cashbacks and TV ads and hoardings and so on. So were you did you underestimate the uphill battle of customer acquisition?
Yeah, absolutely. For sure we did. I think that is one of the key things, right, that we learned from a learning point of view that, okay, what was it that could be done differently if I was starting that app again? I think the first thing was by default, it takes a lot of time to instill that trust, right, when you're launching a new payments company. Also, we were not positioning ourselves as a payments company, which is a good thing. And we still don't think of it as a payments company, even though payments was the foundation for it. The reason is because ultimately we wanted to show it as a lifestyle. So, okay, I'm going out with my friends, so I just want to split the bill. I just split the bill on this particular app and then send money to my friend writing. Right? So it's as easy as sending a WhatsApp message. Right? So the time it takes me to send you a WhatsApp message is the times it will take me to send money. That was the messaging. That was the positioning that we had, which worked very well. It worked in our favor. And that's what got us a lot of virality in the market. We acquired, I think, around 300,000 users, mostly organically, without much. I think we spent 5 lakhs or 7 lakhs in total on the customer acquisition side.
That's pretty good.
Yeah. So I think that way, journey was pretty much going in the right direction. The problem would be, of course, raising the next round. So how do you monetize this customer base?
You didn't have any way to monetize so far.
Not yet. Yeah, not at that particular point. There were a couple of ideas we had that, yes, in the future, these would be a couple of ideas we could monetize on. But yeah.
What were those ideas? How were you thinking about monetization?
Yeah. So one was getting brands in between. So right now, for example, we were only doing peer-to-peer. We could also enable peer to merchant, using the QR codes. So then I could monetize from the merchant. This was when UPI MDR was not zero, right?
But this would
merchants,
pitch you directly against well-funded competitors. This is what, like Paytm, MobiKwik, all of them were in the same.
Yes. But the interesting thing was none of them were doing it on the social way, the way we were doing it. If you think of it, why is Google Pay more popular than Paytm in terms of the users now? It's because Google Pay brings to the consumer network first. Than the merchant.
Okay.
Yeah.
Okay.
Okay. I like Google Pay simply because all my friends are there. I don't think of Paytm when I think of my friends. I don't think, it's not really a social app. Like Paytm is a very transactional app. Google Pay is like still a social app because there was chat element inside. I can chat with my friend, like also same like that's a very important difference. So it was more like Google Pay rather than Paytm is what I would say.
Okay. So you had built in the chat and
everything was
the social element of it.
Yeah, okay.
I had a lingering question from how the payment worked. So you said you wanted to make it as easy as sending a WhatsApp message. If I let's say add a number of my friend and an amount, say pay 200 rupees to Ashok, and this is Ashok's number, Ashok will get a link where he fills out his bank details. Then won't I need to manually do something to make that transaction happen?
No. Once your friend has entered the bank details, that's the money will go. You don't need to do anything.
What about two-factor authentication?
So again, you're not transacting on a merchant, right? You're sending money to a friend directly.
But at the back end, it's going to your account, right? It's equivalent in the eyes of a bank. It would be like a merchant transaction because you wrapped it around a payment gateway. So
that is correct. Thanks. Yeah, that's it. Yes, exactly. So that was the next stage, right? So once we started getting into UPI is when we started figuring out, say, two things. When you're positioning it as a P2P, the bank doesn't ask for two. Like even on a wallet.
Okay.
Yeah.
Oh, okay. So once you entered the number and the other user, the receiver fills out his bank details, then you're able to auto debit the account. The sender doesn't need to put in like the two-factor authentication is not needed. There's no other action needed from his side.
Exactly.
So while this sounds convenient, it also sounds unsafe.
Yeah, you're right. And it's always a trade-off between convenience and safety. I think if you look at most payment apps, we'll always have that duality, right? I mean, you can either be too convenient or you can either be too safe. You're right. But again, the fact that it's a social app, like you're sending money to a friend, makes it famous here, right? You're not transacting with a stranger. So that's again the idea of, for example, why do I trust WhatsApp? Is because I know whom I'm chatting. Right?
Yeah, you were at a point where you were thinking of raising your next round. Yeah, tell me from there, the story from there.
Yeah, so I think once the initial growth started coming in and once the virality started kicking in, which is 2015 roughly, we obviously need more cash, right? Because the idea was you need to acquire customers faster. And we did have a few strategies which we were working out. Like, for example, we were giving referral bonuses, classic referral acquisition strategy, like on the B2C side. There are a couple of interesting lucky draw and those kind of things that were running as well, which were fairly popular.
Cashbacks.
Yeah, kind of like that. A classic strategy. So that was working well, but of course, it's a money burner. So you need to keep burning money until you reach, say, maybe 1 million users, right? Which could be an inflection. So you need to figure out that inflection point where your cost of acquisition goes down. And every customer is able to get maybe at least one free customer along with it.
Okay, the network effect starts kicking.
Yes, exactly. So that was the goal. That was the goal of that year. I think, we did fairly well in 2015. In 2016 is when we started planning for the race. This would be pre-A or a Series A kind of a race that we would have done. Unfortunately, two things happened. One, if you track back if you go back in 2016, 17, you'll notice that just like the down cycle now, there was a down cycle in between. It was not as severe or as bad as today, but it was still fairly bad. A lot of companies are not able to raise capital.
Snapdeal had that famous,
exactly, right? Snapdeal.
Year implosion.
Yes, exactly. So, the bunch of things, these things were happening. And interestingly, there was a major announcement in 2017 that happened where WhatsApp came into India and said, okay, hey, now we are going to do on UPI on WhatsApp. Now, if you look at it that way, WhatsApp UPI pick up the direct competitor to what we have. And that scared the investors a lot. Right? So Then they were like, okay, WhatsApp is just going to eat everybody. There won't be anybody left in the market, which has not happened, which is exactly what I told them, but that is not how Indians operate. Like, if you think of it, there's a mind share, a mind recall factor that needs to be taken into account. Like when I think of payments, I don't think of WhatsApp. I think of something else. But yeah, when I think of chatting, sure, I think of WhatsApp. But long story short, so a lot of the investors were like not ready to put in capital at that point of time, and we were running out of cash from the company perspective. So we went into the hibernation phase, the bootstrap phase again for last year, which is 2017.
Like you stopped spending on customer acquisition. And
yeah, exactly. Stop spending on that, stop reduced salaries as well across the board. And then, since UPI was becoming very popular, it was taking off, and they were like Pay and a bunch of these companies like PhonePe, which were coming out. Pretty much every global company started getting interested in UPI. Right? So that is when we found a good exit alternative. And okay, hey, if we're not able to raise capital, let's at least look for exit. And then we started getting offers from multiple companies. Got few offers from Amazon, Paytm, and the likes. Yeah, and then
they were wanting to buy you for the UPI stack. Like you had built a UPI peer-to-peer payment app.
Yeah.
Okay.
Understand.
Okay.
Yeah. So I think the best offer came from Webmo, which is the company that acquired in 2018.
What is Webmo? I've never heard of them.
It's not a consumer app, so most people would not be aware. It's actually a very, very old school company, 20 years old, more than 20 years old. What they do is they essentially power the authentication or the 3D secure authentication for you. So the 2FA that you do And in India, they have massive market share. I think 80% of India's e-commerce merchants are with them.
Wow. Okay. Wouldn't banks be the buyers of 2FA? Like, it's the banks who...
Yeah. They power the 2FA on the bank PGs. For example, HDFC is a customer for them, etc. Yeah. That's right.
Okay. Got it. So they're like a banking technology company.
Yes.
Okay.
Yeah.
Got it.
That's right.
Yeah. Okay. And how much did they acquire you for?
This was a little over $1 million.
Okay. So still a decent outcome for like investors who have made some money.
Yes, absolutely.
And this was a cash deal or equity?
This was a cash stock.
Okay. And then Webmo also got acquired further?
Yeah. So that was 2018. And then Webmo, of course, was in its own trajectory of growth itself. Webmo had raised, I think, the first round in 2009. So they themselves had been in the market for like 8-9 years now. And they also had plans to either go public or look for a good exit outcome for the investors that had put in capital. And hence, I think, PayU came along, and PayU really found a lot of value because PayU had the front end that payment gateway, but they did not have deeper connectivity in terms of authentication services. Yeah, so they acquired.
Okay. Got it. So you got equity in your Webmo equity got converted to PayU equity, basically.
Yeah, we got converted to PayU equity, which further got liquidated. So it's basically, they did not give out PayU equity. They technically they will just liquidate everybody and give
you
cash.
buy it. Okay.
Yeah.
Okay.
Yeah.
Got it. Okay. Got it. Interesting. And what about you? Were you still like, your startup was called My Poolin, right?
Yes, definitely. Yeah. That's right. Yeah.
So you continued to stay and work at My Poolin within Webmo, or?
Yeah. That is how it was. It was basically a subsidiary and acquisition. So they maintained the subsidiary at an arm's length and, of course, continued to share some technology knowledge. Yep. So we stayed there, I think 2017 is when the acquisition happened. Sorry, 2017 end is when the acquisition happened. And then 2019 is when the PayU acquisition happened. Webmo plus PayU for little over 2.5 years, close to 3 years. Yes, before starting. Exactly.
Okay. Got it. And was Webmo able to give the kind of capital you needed to create a social payment company needs capital, right? Were they able to invest adequately?
Yeah. So we actually pivoted. So post the acquisition, because Webmo's key interest was more in the technology rather than less in the B2C side. So they wanted to reuse this UPI tech stack for their own internal purposes and the PG purposes. So Webmo did not have UPI, for example, at all as a tech stack. And they also did not have Getbank as a partner, which was one of our partners. They got the benefits of both of these things. Yeah. It was more for tech plus team acquisition rather than say a front-end user-based acquisition. Yeah.
Okay. Like Wipro wanted to get into the payment gateway business.
Exactly. They wanted to build their own UPI links.
Got it. Okay.
Yes.
So then what? What made you want to move on? It's a fairly obvious question. No founder sticks around long after getting acquired.
Yeah. That's it. Yeah, absolutely. So it's very hard. I mean, obviously, you notice this common, right? Founders don't like to stay in a large company. It doesn't suit them. I think the problem, or the second problem also becomes fairly evident. So I think the origin probably goes back to my coding. It's like, I always think of a lot of the times your first startup is a foundation for you, or a pathway for you to build the next one. And everything that you learn in that, you try to bake it into the next one. For example, going back to 2015, the problem that I mentioned, right? The second leg of payouts. How do I get money from this central pool account down into the users? Now, in hindsight, it seems fairly simple that, okay, the bank should have an API of my MPS, which you just hit and send money out, which is exactly how it is. But just integrating that single API takes you 4 or 5 months. And to my mind, that's a ridiculous number. Like, I think maybe in 2014, 15, you could have that patience. But in today's age, companies don't have patience of, so 6 months. They can't wait for 6 months to build a basic pipe, but then pipe is in a couple of hours from somebody else. Thought process that I went back to that after the acquisition by PayU, my thought was, okay, 5 years had gone by. We were in 2020 now. I was 2015 when I started. Something should have changed. But that is not okay. Also scenarios. The time that it takes if you do the right integration, even now, is the same as what it used to take in 2015. So which is very surprising, which clearly means the banks are not looking at it or don't want to look at it or not look at it. So then that means somebody else has to do so. Some other company has to come in. But it's fairly obvious that yes, some company has to be built out which takes this problem and solves it and goes to market. So again, going back to the interesting problem that I faced personally as a founder, and I wanted to solve it for myself. I have a fintech problem.
Help me understand what kind of pipe this is. Like, there already exist payment gateways, which are essentially pipes that help e-commerce businesses to take payments from customers. So that pipe already exists, like for customers to pay merchants. What kind of pipe is it that you saw was missing that you wanted to build?
That's it. Right. Yeah. So think of it as like when you look at a payment gateway, right? Payment gateway is great at solving one particular thing, which is payment collection. And it works for merchants basically, right? If I'm a direct merchant, if I'm selling something, I can use a payment gateway. But it only solves the first leg of the problem. So remember the two bifurcations which I told you. The second leg of the problem, which is, okay, I have the money now, but I also need to pay my seller or my vendor. I need to do a payout as well. That's something most payment gateways don't. Of course, the new ones have started doing it. But if you look at the old ones like PayU and all, they still didn't come back ready. In fact, I was the one developing such set of PayU's payouts for it at that point. Which is also how I noticed PayU was still struggling in terms of recognition. So yeah, I think that was the key insight. Okay, somebody needs to solve the second leg as well. And more than that, companies need access to the underlying banking rails directly. They always don't want to rely on a payment gateway, especially if they want flexibility. Like, for example, if I have a marketplace, right? Now, as a marketplace, I might want money to be settled instantly. I don't want to wait for 2 days for the money to come in, right? Because my sellers are waiting for the money. Or once the money comes into the seller, there's probably a lender who is waiting to recover the money from the seller. So that kind of a complex workflow, like money going in from here, going out there, and then going to the lender as well. That kind of a complex workflow is not something that a payment gateway looks at. Right? A payment gateway just
you think that payment gateways take 2 days to have the money hit your account?
Yeah, typically. They can do faster, but typically then
to do faster, they'll probably charge more.
They charge you.
It'll be like a premium service.
Okay. Yes. Yeah. So that was how payment gateway is very different. This is the kind of APIs or other pipes which they don't look at. The second one is more complex. So for example, if I'm building a full-fledged B2C lending application, right? That payment gateway is just one small part of it. Like, I have to build a lot of stuff. I have to look at connecting with lenders, getting the money disbursed, doing underwriting, doing KYC, or just so these are the things again which banking APIs or banking pipes can.
What all pipes can be built? Like one example which we discussed is an IMPS pipe where you can ping your own account to do an IMPS transfer and just send it the account number and the IMPS transfer happens. So what else is there?
You mean what else we have or what else can be built out?
Can be built. Can be built. Yeah.
What can be built? Okay. The possibilities endless. I mean, there's a lot of things which we haven't even thought of. Think of UPI autopay, right? Oh, you had to enter a PIN every time you had to make a payment. But now with autopay, like somebody is able to debit money directly, like using UPI, without any need of tourism. So that kind of thing is, and you can use that not just for repayment, you can use that for subscription, you can use that for your Netflix subscription, whatever subscription. UPI as payment mechanism.
UPI autopay is live?
Oh yeah, UPI autopay is live. Has been live for a long time. Yeah.
Okay. I've not really seen, like there was this whole fracas when credit cards stopped working for recurring payments. I didn't see any e-commerce company tell me that I can use UPI autopay.
So some of the largest merchants do, like for example, I have UPI autopay set for my Apple subscription. So on my iPhone, I can just set up UPI and going there. Even I think Google has it if I'm not wrong. There's a different challenge in UPI autopay, which is the success rates are still fair and fair in the market.
Okay.
Yeah.
Okay. Got it. Yeah.
Yeah, but I think that's one. Then I think you can track the latest developments, right? UPI has now become interoperable with Pay Now in Singapore. Hey, that's a whole different universe. That can I use UPI for cross-border eventually? So I think we're just starting. There's so much that can be done when it comes to banking.
Okay. Like broad categories would be like around payments and in different form factors, like regular repeated payment and things which make say multiple payments or payments based on some time related triggers or things like that. Like that, those are like the broad kind of pipes that can be built around making payments more efficient.
Exactly. Payments for sure, efficiency is the part of it. I think credit, as I said, right? Credit in India has been fairly offline and fragmented as well. Only now you're starting to see some digital lenders come in the mix. So I think credit is a huge category.
Okay, got it. So again, tell me that 0 to 1 journey. You had this idea that the pipes to banks are broken or are like take a long time to build. So a company should build those pipes and make them available on tap. How did this idea get executed?
Sure, absolutely. Yeah, I think once the problem statement was clear, we obviously started. I think the first thing was to figure out which bank or which partner to take. So we went back to our old friend, Yes Bank, which has been a great partner to date. They became the first banking partner. They were very happy, of course. Because ultimately, if you look at it from bank perspective, it's a win-win for them. They're able to get a lot of float as well. They're able to get more revenue as well, right, from the API side. That was the first step. I think the second one was starting to build out a team. So I started looking at, who can be the right engineers to help me build this? A couple of engineers joined me from the previous organization because they do work. Not happy with the large company. They wanted journey of a startup again, which was great. I think that really showed a lot of trust in the founder again. And then, of course, I think the moment I shared that, I'm going to start again, a lot of the angels definitely want to help you the second time around. So I was able to raise an angel round fairly quickly. I think in a matter of 20-25 days, we closed our first round.
How much did you close?
This was around 300K. 300 USD, and then Y Combinator happened. So I had applied for YC before starting out officially. And then, of course, YC application got accepted, which gave us a whole different boost in terms of the branding, in terms of network. And then we closed the larger round, seed round, which was close to $1.7 million, August 2020.
Okay. And the way you would earn would be like a few pennies for every transaction. That would be the way to earn.
Yeah. So a few pennies, either flat or percentage, depending on the kind of transactions. Yeah.
Okay. And what kind of customers would want this kind of a banking API?
Sure. Yeah. So broadly two categories, I think, at a very high level. One is early stage fintechs. which are just starting out their journey. For example, one of our earliest customers is FanPay. I think they're a neobank, like for teenagers. Yeah, for them, it was a great foundation to build on top of. They didn't have to go around and figure out, okay, where do I get KYC from? Where do I get XYZ from? So for early stage fintechs, it's a no-brainer. Like within a matter of a month, they can literally build out the entire application and go live in the market, which used to be 1 year in 2015. So drastic 10x difference in terms of time and velocity. So that's one major category. So we have a bunch of fintechs we use. The second one is, and this is something which caught on fairly early in the first 6 months, is larger non-fintechs or rather larger incorporates that want to add a fintech vertical, right? So for example, I think a good example here would be Jumbotail. So Jumbotail is one of our customers. For those that don't know Jumbotail essentially runs back-end SaaS for retailers, like they're able to manage logistics and all that stuff. Now,
they're like a competitor to Udan, basically.
Exactly. Yeah, kind of. Yes. So now what they wanted to do was very different. Like they are a non-fintech company that want to add their own QR codes. Like they want to issue their own QR codes. They want to collect money through their own system. They also wanted visibility on the transactions. They also wanted to recover money from the seller for credit that is given. So a bunch of complex workflows. So these are second categories. Second category of companies.
Okay. Got it. And like, you must have had a product journey, right? Which API did you build first, and what was your go-to-market for it? Like, just go through that journey. Like, you've been doing this for about 3 years now, right?
Yeah.
So just take me through that 3-year journey.
Sure. Absolutely. Yeah. So I think the first step, once we had the team in place, and once we had the bank partner we assigned in place, was, of course, to figure out, okay, which is the first API that is the highest in demand. I think the APIs that are the highest in demand, and still continue to be the highest in demand, is payment collections. How do you simplify collections of money using, say, payment links, UPI intent, right? Those kind of things. That was the first thing, right? That was the first set of APIs that we really built out. We also built out something called a virtual account system, which is very popular, especially in terms of easy reconciliation of money. Like a marketplace or a neobank can essentially create a virtual account for every user. And then that user can deposit money into that virtual account, and automatically the system will recognize this is the user for which money is. So I think that kind of reconciliation engine, that kind of simplification engine is something we built out as well. Yeah, so these are the first set of APIs. Then we entered a more complex domain of payouts.
One quick question. For the first set of APIs on payments, how did they work? Like, what would be the information going to a bank, and what would that information trigger?
Yes. Yeah. So here the bank's role is, I would say, fairly less, in the sense that I tell you what's happening is the first step is you need to generate a virtual account, right? So let's take the case of like Jumbotail. Now Jumbotail is creating virtual accounts for every retailer, right? So every retailer has one virtual account, and the consumer, when he goes and wants to pay that retailer, he just needs to send money to that particular virtual account. It could be through a QR code, it could be through UPI, or it could be through regular net banking, is whatever he also. So the bank's role is, one, to match the money that's coming in into that account, which they're able to do through that virtual account number. That's pretty much, I would say, the role of the bank, and of course notifying us that, okay, the money has come in, and now you can take it ahead. Then our role comes in, okay, that the money has come in, let's add it into the balance of the retailer. Let's inform Jumbotail that the money has come in. And then, of course, Jumbotail has its own processing beyond that.
Okay. Got it.
Yes.
You built that payment gateway also, like through which the payment gets processed. That part, obviously, you would. Or did you wrap it around an existing one?
No, this was all in-house. All the APIs were basically directly connected with the bank APIs. But there's a one difference here, like in the sense that we are not a standard, as I told earlier, we're not a standard payment gateway. We are a very different form of a white label deep payment software gateway. And it's sort of like the difference in terms of control of APIs is something that most payment gateways don't provide. Also, we specialize in back-to-back payments. Like we don't do card payments. Like you will not find a credit card or debit card option. On our page. That's what.
Okay. Interesting. Yeah. And how does one build a payment gateway? Does one need to go to each and every bank and integrate with them? Because the customer who's paying could be from any bank, or does UPI simplify this whole thing, or like how does that happen?
Yeah. So there are a lot of different components here. I think the first question to think of is, if you want to build a payment gateway, what all offerings do you want to offer to the customer? If you're looking at a credit card, debit card and offering, then you have to interface with the card networks. Then you have to interface with Visa, MasterCard. If you're offering something like net banking, then yes, you have to integrate with pretty much every bank or use somebody else who has done net bank. Right? But if you're offering UPI or virtual accounts like us, then you don't need to do every bank. Okay, then you can just rely on, say, one or two banks.
Okay. And these one or two banks are the banks that generate the virtual accounts for you.
Yeah.
That's all you have to do, because the payer is paying through UPI. So therefore you don't need to integrate with all the banks because.
Yeah.
Okay. Got it.
Okay. Yeah.
Okay. Yeah.
So that's, then we enter into the payouts. Yeah. Payouts, of course, as you can imagine, there's a different use case altogether, which is, for example, payroll payouts, right? Payroll processing is a use case. Vendor payouts is a use case. Cashback payouts is a use case. So anywhere wherever the money has to go to a consumer, or a vendor, that's it.
Okay. And this would again trigger, like the trigger would be an account number and an amount which has to be paid. That's the trigger which would go to the bank. Okay.
Yeah.
Okay. Got it.
Yes. Yeah, those are the payouts, I think. So these were a core part of our payments model. Then, I think, but towards end of 2020, we launched KYC. Yeah, so KYC was an interesting point as well. I think this was something which I thought of way earlier on, that, okay, identity verification in itself is a huge problem. Like if I'm a fintech, the first problem that I think of solving is, okay, who do I onboard and who do I not onboard? Right? And how do I decide? How do I verify the identity of this person? So basically, we're talking about PAN verification, Aadhaar verification, right? Face match, liveliness check, any kind of identity, so to say. Yeah, I think giving that all under one roof and giving that as part of a very differentiated is something that came in second.
How did you differentiate this? This is this KYC as a technology stack has been around for a while.
Yep, I know. That's true. It has been, I think the key, if you look at the most KYC players, right, what ends up happening is, after a certain point, if you are a KYC company, for example, your target market starts saturating within a particular region. Right? So you have to branch out and go deep into, say, banks and customers, or you have to go global, right? And you become a global KYC player, which is what, if you track, most of the KYC companies are doing as well. So any of the regular KYC companies in the market, like for example, if you take Hyperwatch as one name, they're more centered in US. So they're trying to get deeper into the US market.
Okay.
Yeah. As compared to the India market. I think that's one. And second is, most of the KYC companies, they typically provide you a fragmented KYC collection. So basically, it's okay. Now, I need to stitch together multiple journeys in order to make it happen.
Okay.
So if I'm onboarding a user, I might want to do a KYC, I might want to do PAN match, face match, etc. Now, can a company stitch this together for me? Or do I need to stitch this together myself? Is where the differentiation comes in.
Okay. So essentially the rent offerings are not so self-serve. Like what you're doing is like a very fill it, shut it, forget it thing.
Yeah, that's good.
Okay.
That is
okay.
Yes. So the KYC now has become, that's where the positioning of the company has evolved. It started with being just plug and play payment APIs, and now it's become more broader, with banking as a service on one end and then payments on the other end. Yeah.
Okay. So KYC you launched in 21.
End of 2020.
Okay.
Yeah.
Okay.
Yeah. So, then we moved on. I think in 2021, the key idea was, of course, just to go all in terms of growth. And I think we grew fairly well. I think in 2020, and we were at probably close to $10,000 to $20,000 of like monthly revenue. And by end of 2021, we were at 100K. So basically almost a 10x growth in terms of monthly revenue. Sure.
And this was like on the back of your customers growing. If you, let's say you sign up FamPay, while initial numbers of FamPay might have been low, but they would have scaled up pretty rapidly. And so therefore your earning from FamPay also keeps going up.
That is it.
Okay. That was the key. What about adding more clients?
Of course, I think probably there's a 70-30 kind of split there, where 70% of the growth typically tends to come from
existing
customers. Existing clients. That's right.
Okay. Interesting. Got it. Okay.
Yeah, and then surprising, right? I think once you set the foundation right, ultimately there's a good word of mouth that keeps on spreading. The company has a great call. Now the platform is good. It's reliable. Like a customer has grown by 10x in one. Just riding on top of this infrastructure. Hence, other customers also want to come in together. And I think that growth continues. So that's like I would say 0 to 1 journey that happened, and now we're already in the 1 to 10 phase, both literal and metaphorical channels.
And did you launch more products in 2022?
We did, yes. Once the payments and KYC were solved, the idea was, okay, how do we now go deeper into banking? For example, I think one key request that started coming from customers was, okay, you are solving payment collections for me. You're solving payouts for me. And you're solving identity verification. Can you also start issuing instruments, say like a card, prepaid card, for example? Or can you issue a loan, right, on behalf of, say, a lender in the back? Which is where the next set of modules will work, right? So that is how we launched the prepaid cards module. And they're very similar to payments. You just need 1 or 2 good bank providers or non-bank PPI providers who have the PPI license that are able to, collect money, store money in the PPI wallet. And again, this is a fairly lucrative business again, especially if the card spends are high. Because ultimately you're able to earn a percentage margin here on every transaction spend. So this can actually generate more revenue technically than payments at a feminist scale, purely because the margin is high. But you have to get a lot of volumes for it to meaningful as compared to payments. So I think that was the next one. The cards.
Like prepaid cards, there are 2 ways you would earn. One would be the issuance fees, like when a new card is issued at that time, you would earn something. And then there is a merchant discount rate, 1.5% to 2%. Out of that, some share would come to you.
Okay.
Who are the customers looking for this kind of a solution? What is the use case for it?
Yes. 2 kinds again. I think one is, there are 2 popular kinds. One is your consumer neobank. Again, the likes of FamPay, which obviously have their own card, in the market. So all of these guys, at some point, if they are consumer facing and if they want to position themselves as a neobank, they will need to have a card or an account. So that's one fast growing, very popular use case, of course, in India. And it's pretty much so many neobanks now in the country. The second one is more around corporate cards. So expense management, for example, employees cards and those things.
What Happy does. Okay. And these are cards which need to be loaded before you can use them. The user would need to put in money in the card. Or like in FamPay's case, maybe the parents put money into that card for the kids to use.
That is correct, yes.
Any company using you essentially needs to have an in-house development team, right? Because you are providing tools which cut their time to launch the product. To integrate those tools, they need an in-house development team or be working with a development agency or something.
That's right. You're right. To date, yes. But we're soon getting into the whole SDK or the no-code kind of environment as well, where you're doing just embed an SDK and the SDK will do your job instead of an API. So
what is the difference between an SDK and an API? So what are the implications for what you just told me?
The implication is your development time goes down. Right? Through an API, there's still some development required because you have to take care of all the parameters that you want to pass to the API. And you have to take a little from the corner cases. Plus, an API typically, or rather, I would say from a safety perspective, it's just an API be exposed. These are payment APIs, KYC APIs. So they're carrying very sensitive data. Right? And they should not be exposed on that app. So let us say let's say FamPay, right? So FamPay uses our APIs, but FamPay does not hit our API directly from the mobile app. The mobile app will first hit FanPage server. The FanPage server will then hit our server. That's the safest way to consume it. Versus an SDK. What an SDK can do, an SDK can simplify a lot of the processing which happens on FanPage server, for which they would have had to involve some backend developer. So on the API, like in this scenario, I would have to involve a backend developer and a front-end developer. A front-end developer would take care of the front-end on the app. The backend would be on the API side. But with SDK, technically, I can just have one developer. I consume it directly on the app front-end. A lot of the complexity of the processing of the backend gets passed on.
Okay.
That's the case.
And will your earning change between providing API service and...
No.
Okay. It's just going to increase adoption. Like more people will be able to adopt you if you're offering an SDK.
That is correct, yes.
Okay. Interesting.
Yeah.
You raised more money also, right? After the YC, you did like a pre-series A from YC.
Yeah. So we did a seed round post YC, including the YC capital that came in. And then, we just closed our
How
series
much was
A.
that? YC.
So including YC, this was 1.7 million.
Okay.
Yeah.
And then you did a series A last year.
Yeah. We did a series A last year. That's
just 4.7.
Yeah.
Okay. And what are you using this money for?
Mostly expansion. I think now it's pure growth capital, like the 0-1 has done already. Now the idea is, again, this flywheel in motion. How do we make that flywheel move faster? So it's basically going to feed that flywheel in terms of, of course, having more resources, right? Having more bank partners, being able to do better support as well, those kind of things. And of course, building the products that the new products generation came, right? So credit, for example, that's a fairly new product for us.
What is the credit product?
Yeah, so basically lending infrastructure, right? So things which we discussed till now were more on the acquiring side. And also, if you look at it, the things which I told you, KYC, payments, and all these are all cost centers for a company, right? So our companies are essentially spending money on that, right? They're not earning money on that. Now we are entering the journey where we want to enable these companies to earn money from banking, which is where cards helps a lot because, again, through people cards are able to generate money. The MDR share goes to fintech as well. Same thing on credit, right? So through credit, they're able to acquire customers or get a share of the MDR as well, again, from a credit perspective. So it becomes a revenue stream for them.
Okay. Like you would allow people to give loans through an SDK. That's the goal.
That's the goal, exactly. So I think a very simple example here would be like, I think let's take FanPay. Obviously, FanPay now is teenagers, but a lot of these teenagers want to graduate, become adults. They will want to at some point, right? It might be a simple BNPL line, or it might be a simple person. Now, for FanPay to embed that, they need an entire infrastructure, verification, etc. That's
Okay, so you'll make that like a simple plug and play solution where FanPay doesn't need to, because typically to start a lending business, you need to first find a source of capital like a lender, and then you need to negotiate the rate of interest at which they will lend, and then you need to build a credit underwriting engine which helps you decide whom to give a loan to. So you're building all of this through a plug and play solution?
Yeah, some parts of it, yes. Sure.
What parts of it are you doing?
So,
or maybe say, what parts are you not doing?
Yeah, so we're not doing the underwriting. Like, we're not doing decisioning for them because our belief is decisioning varies from company to company. It's very subjective for decisioning happens. So, yeah, that's one thing. Rest of the things.
So, as in you're connecting them to the source of capital also?
Yes, absolutely.
With a pre-negotiated rate of interest, or how does that happen?
Yeah, that varies. Again, that's also subjective, and the way I can't really do much at this point again because it's like a new product, I would say, that we are launching. But yeah, broadly think of it as a plug-and-play lending infrastructure where you have lenders as well in the backend, and you can pick and choose which lenders you.
And you don't need to deal with the lenders directly.
You can choose to, but you don't need.
Okay.
Yeah.
Okay. Interesting.
Yeah.
Say Navi or any of these new age NBFCs in credit, and all of them would be there. And but then the rate of interest it's not a thing for which there's a price card, na, that you can have a very
Exactly.
transparent rate of interest. How does that get worked out? What rate of interest which lender is charging?
That's what I said. So I think there are cases where these companies would choose to engage, which will be more frequent with the lender. And they say, okay, I want to negotiate my own rate of return, which is fine. It doesn't. Because again, our interest is not in terms of hyping up that rate of interest or giving a bad loan and all that. We still make money on a per API basis. That's our forte. Yeah.
Okay, so a company which has some proprietary source of data through which it feels it can make better credit decisions, would go ahead and negotiate for a lower rate. But for other companies, there'd be like a rack rate, which is available to them on tap.
Exactly. Yeah.
Okay. So how do you get buy-in of the lenders? Because their typical way of working would involve a lot of due diligence of the person who's coming in, which you're now just saying that anyone can plug into this API. And I mean, it's like in the collections business, it's easy to give money. It's hard to take it back. And any successful lender knows that. So how do you make how do you get their buy-in?
So again, it's a mutual thing, right? So in the sense that it's not that every lender is exposed to every borrower. Only if this borrower and this lender have an understanding that yes, we want to work together. That is when they work together. Through reason. So that's exactly how it will happen. It won't be like we won't say, okay, you don't want to work with this NBFC, we'll just plug you with this NBFC. That's not how it will happen. Of course, that NBFC has to make sure that you're okay. Diligence will be there. Again, it's not that everybody can plug it. Not everybody will get this product as well. Going to be offered to maybe 20-25% of our customers on a need to language.
You're probably in a good position to talk about what's happening in the fintech space. Like there were some recent regulatory changes because of which a lot of these BNPL companies were, they had to pivot their business model. Can you just throw some light on what was that whole thing about? A lot of BNPL and these new age credit cards, like companies issuing credit cards had to pivot their business model. So what happened there?
Yeah, it was very simple actually. So what happened is BNPL cards, which essentially were people giving loans on prepaid cards. That was going well from a from a tech perspective, product perspective. It's very popular for it at the moment.
How does that product work? A company would say that you're getting a personal loan of one, and then they would give you a card which had 1 lakh in it.
That's the
reloaded.
Yeah, that's it. So there was basically it's a credit line, right? I can draw just a credit card. I can tap into that credit line of 1 lakh in the backend. Just that it's technically not a credit card. It's a card which is getting loaded in real time.
Okay. So the moment I want to spend money from that card, I have to first on my app load money in it, or that happens real time.
You won't need
as soon as you swipe it at the back end. Okay. Exactly. Fascinating. Okay.
So fairly good product, in fact.
Because it reduces the cost of the loan because you're not actually paying interest on the money until you actually swipe the card somewhere.
Correct. Exactly. Exactly. I think that was the construct itself. The major problem that it had, rather what people observed it had was, one is it started growing so popular that it overshot the adoption of it. So to give you a perspective, people were asking, or the number of prepaid cards on BNPL were more than the credit cards for that one, for a couple of banks.
Because of fintech partnerships, like all these fintechs were aggressively acquiring customers. Was that the reason?
Absolutely.
Okay.
And a lot of these were new to credit users. So a lot of these were like people in their early 20s, mid 20s, late 20s, who just wanted a small credit line of like 20,000 rupees, 25,000 rupees, all those things. So the moment that number started overshooting the credit card is when I believe the regulator got concerned. And that's essentially when they said, okay, hey, we want to stop this and we went back.
Okay. And what was the pivot that the BNPL companies had to do then?
Yeah, so many of them are still pivoting. Technically, if you look at it now, BNPL to a regular lending or credit line is not allowed on the card. However, you can still do a co-branded credit card. So you can still issue a co-branded credit card. Of course, there has to be a bank in the backend, which does it. So that's essentially, I believe, what most BNPL players are applying.
Oh, Why? So is a credit card for a customer, is it tougher to get a credit card? Like you said that these cards shot up, whereas credit cards were lagging behind. What is the reason for that?
Yeah,
Like a credit card is more regulated as a product, so there's more KYC requirement.
Yeah, it's not just about KYC, it's also about the comfort of the bank. If you look at it, C does not offer credit card everybody. However, these BNB players will be able to offer some sort of card. That's the key. Yeah.
Okay. So HDFC doesn't care how many prepaid cards are issued because it's not credit risk for HDFC. Whereas a credit card is a credit risk for HDFC. It has a stricter due diligence process there.
Correct. That is correct, yes.
And do you agree with this? Or do you think
I think it was
restricting access to credit?
Yeah, it's quite restrictive for sure. I think there could have been a better way. I think they should have regulated it rather than banning it, is what I feel.
Okay. And what about credit on UPI? Does that exist as a product?
Not yet in the full form. There's one form that exists, which is your credit card UPI linkage.
Okay.
Yeah, your RuPay cards now have possibility to link UPIs. But yeah, I mean, proper bank account on credit on UPI is yet.
Okay. Interesting. Okay. We briefly spoke a bit about WhatsApp not taking off. What do you think the reason is? Is it an execution issue or is it like fundamentally WhatsApp would not take off as a payment product?
Quite a few. I think one, by default, Indian regulators as well as most people in India don't like foreign companies coming in and taking up their share of the market.
So what were the mistakes in your first startup which you are consciously avoiding in the second one?
Yeah, I think one was, not growing faster. Like we could have grown faster. Which means obviously we should have raised more, we should have spent because we need that initial escape velocity. I think that is very important, which I've taken care of in this one. Yeah, I think second is to really ensure that you are right at the heart of that city or at the ecosystem where you feel your best customers are. I think probably, for example, one, we could have done it in maybe Delhi or actually Bangalore to say the city, because Bangalore would have been probably more tech savvy than Gurgaon. Yeah, so I think these are two the initial learnings. Third were more around nuances of, kind of like kind of investors you want, right? Those kind of things as well, which pretty much everybody figures out. They're all going to invest in the market. Yeah.
Like you want investors who can continue to fund you for subsequent rounds and things like that.
Yeah, absolutely. And more importantly, you want investors who are not poking every time. Hey, what is happening? And they have to, it has to be patient capital.
Okay. Interesting. So what is the way you think about growth? Is it through acquiring more customers, or is it through expanding the product portfolio, or is it through increasing the pennies that you earn for every transaction, or what are the ways you've thought about that?
Yeah, no, ultimately it has to boil down to the bottom line. Right? I think in our case, we're very clear that we don't want to just track vanity metrics. Right? It's not that we don't want to show huge money flowing to our system, but we're not earning much. It has to make sense even in terms of revenue. Yeah, so that's essentially what we look at. Okay, am I getting good enough ROI, good enough ARR on this particular thing? And the margins eventually, like the good thing is as you increase your network effect, as you increase the volumes, automatically your margins improve, right? Because you're able to drive your cost down on the provider side. Yeah, that's essentially, I would say, the key goal.
So what do you have to pay out when you build an API? Let's say you are working with Yes Bank to build an API for payments or for virtual accounts. So what do you pay out?
Yeah, it's a similar cost. So again, the cost varies. So for example, in UPI, we don't pay anything because the banks cannot charge anything for UPI collections. On payouts, yes, there's a cost per APIs, per payout, there's a cost of that. Say few pennies for every transaction.
And you are essentially just marking that up and charging the customer. How much do you mark up?
Very, KYC will have a completely different margin structure. Overall, the margin can be anywhere from 20-25% all the way up to 80-90%.
Which are your most profitable products?
Collections is profitable because, again, technically the bank doesn't charge us on UPI, but we are able to charge the customer. Cards is also profitable, but the volume, as I said, is a question mark there. yeah, these are two. From a margin perspective, these two.
The collections means what, basically, when a customer is paying a merchant?
That's right. Yeah, that's right.
Okay. And so you're able to charge your customers for UPI transaction also. But
That's
how is that? I thought that most customers would expect UPI to be a free thing.
no. So when I say customers, which is our customer, which is companies.
Like Jumbo Tail, for example.
Yeah. Please pay. Because see, ultimately, the benefit for them is your reconciliation. Right? If I am using a payment gateway, right? Sure, I can bypass a payment gateway. But think of it like this. I'm an e-commerce website, Amazon. Why do I need to pay 2% to a payment gateway? Like paying. I can just share my account number with my consumer. And the consumer can deposit money into that. Why do you think they don't do that?
Yeah, reconciliation.
Exactly. Right? They're doing millions of transactions a day. How will they fit and reconcile them? That's exactly what we saw.
Okay. So any online business which has an option to pay by UPI, they are paying for that transaction as well, the UPI transaction as well.
Most of them are paying for that. Yes.
Okay. And what is the rate for that?
A few pennies. Very simple. So a few pennies or small percentage,
Like,
maybe 0.1.
Much lower than MDR. Like MDR is 1.5 to 2. So this would be like 0.5 or something like that.
Correct.
Interesting. Okay. How have you built up the organization? Help me understand Decentro as an organization. What is the kind of people, kind of culture? How have you done that?
Sure. Yeah, I think so. We are now 50 people overall. Within that, close to around 22 tech product. Yeah, tech and QA actually. And there's mix of product as well, mix of business development. I would say very diverse in terms of the structure because we need people across the board. We need business development, of course, to handle a lot of inbounds, outbounds. A couple of HRs, design, marketing, customer success, operations. So yeah, fairly balanced from that way in terms of tech and non-tech. Yeah, of course, there are hierarchies, junior engineers, senior engineers, lead engineers, those things.
Okay. By when do you think you'll hit like a 1 million MRR number?
1 million MRR number optimistically by this year end, December.
Amazing. So that's a fairly high revenue per employee at a headcount of 50-ish. That would be a pretty amazing multiple.
Absolutely.
Yeah. Amazing. And that brings us to the end of this conversation. I want to ask you for a favor now. Did you like listening to this show? I'd love to hear your feedback about it. Do you have your own startup ideas? I'd love to hear them. Do you have questions for any of the guests that you heard about in this show? I'd love to get your questions and pass them on to the guests. Write to me at ad@thepodium.in. That's ad@thepodium.in.